All right, thank you guys for that warm welcome. I want to congratulate all of you guys, you folks at home too. There are worse places to spend a weekend, but you guys are all here. You're serious about this stuff. You guys want to get better. You care about investing in the stock market. So I want to congratulate all you guys for being here as well. I'm Jerry D'Ambrosio. I am the manager of educational content, also our swing trading coaching group. One of our coaches, Steve, and I. We tackle the swing trading coaching group. We have a great time. I also kind of chip in on the jockey club from time to time as well. So great to see a lot of you guys here. So in this next presentation, we are going to talk about a strategic approach to decoding market trends. Like Steve said, this is our kind of our market timing talk. I want you to look at this a little bit more in depth. This is not so much market timing, it's market analysis. That's how I like to put it, because we have indicators that help us time the market and help us give you clear-cut signals for when it is time to buy stocks and when it is not the time to buy stocks. But there are indicators as well that just help us understand the market better, right? And I think as the years go by and you guys get more familiar, you're gonna understand market conditions and then incorporate timing signals into your day-to-day approach, right? So this is your tactical approach to trading in the market. Steve went through the strategic, higher level indicators and things that you should be looking at. But this is your day-to-day now. And we're going to talk about the signals that we give and which signals you're going to gravitate more towards and follow a little bit more, right? Because we have a ton of different market timing signals in the program. Dr. DeLito once said, the single most important thing to know is whether the market is going up or down. Everything follows from that. Truer words have never been spoken, right? Steve went through stock analysis and things like that. Before you buy any stock, though, you have to understand what the market's doing, all right? And I'm sure you've gotten on the wrong side of the market before, and you know how painful that is. So we just want to make sure that we're always staying on the right side of the market, not buying stocks when the market's falling, when the trend is down, and just keeping the wind to our back as best we can, knowing that it's not going to be 100%. There's no signal in the world that is 100% accurate. We feel that the signals that we have and the system for analyzing the market works more than it doesn't, more times than it doesn't, and that's what we need to do for you guys, is just kind of stack the odds in your favor, provide you guys with signals that work more than they don't, and you'll see the performance in that long term. Let the market trend be your friend. Buy rising stocks in rising markets, sell falling stocks in falling markets. Now, a rising market to some might be different than others, right? The market could be going up day over day, right? That's a rising market. It could be going up week over week. That's also a rising market. It can go up for a couple of weeks, right? That's also a rising market. The signal that you take will depend on, remember that investment matrix that we went through, right? Looking yourself in the mirror and saying, I'm a conservative investor. I'm going to focus on a slower signal that does a really good job of keeping me on the right side of these big major market moves, and that's where I want to live. That's where I want to do my investing, in those types of environments. Then you have more aggressive traders, like myself and Steve. We are the swing trading coaching group coaches in the jockey club, and we do a lot more active trading using some faster signals like the primary wave, like the green light buyer. We'll go through all of these signals, and I'm gonna take you guys through the progression of signals and give you some tips on how to react to each signal, as opposed to saying, you know what, I'm just gonna follow the confirmed call. And that's fine. If you want to do that, maybe you have a rule in place where you're just gonna buy stocks on green lights in a confirmed up. That's fantastic, okay? But again, as you get more comfortable with these signals and understand when they come, how they come, you might want to react a little differently earlier than when we get a confirmed up call. The market timing graph is your key to success in decoding market trends. Follow the signal that best fits your investment style. I am in the camp where I believe that everybody should be doing different things, meaning you should be managing a retirement portfolio, right? I'm sure you guys have retirement portfolios where the management is different, it's slower, the stock analysis is different. You're looking for high RV, high RS, good growth rate, earnings per share that's rising. and you're buying these stocks and you're holding on to them for a longer period of time. Then you have a portion of your overall investment capital where you might be trading a little bit more actively. You might have a portion where you're trading options and you're in Ron's retirement group. I feel that you should be allocating your overall investment capital, and we're not here to tell you how much to put into each, but just become more of a well-rounded investor where, hey, I might swing trade a little bit or trade a little bit more actively. I can see how I can grow my portfolio a little bit faster when I do that. Then you have money where you're saying, I just want to be a little slower, buy safe stocks, undervalued stocks that are going up in price when the market's going up, and hold them for a longer period of time. So you're becoming a more well-diversified investor, allocating your money differently. So when we say that best fits your investment style, just know that if you're managing a conservative retirement portfolio, you might not be using technical indicators to find those investments or trades, right? So make sure that your stock selection fits with your portfolio goals, and that those goals line up with your the market timing system that you're using. So a conservative investor might not be using the primary wave to trade or to buy stocks. The confirmed calls or the DEW might be the signal for that portfolio. Everybody following me there? So make sure you understand the different signals and your goals and objectives for each of your portfolios. The VectorVest system, proprietary components for decoding market trends. This is it. This is our system, our indicators for market analysis. They are used to provide you folks with clear-cut market timing signals, letting you know when it's okay to buy stocks and when it's not okay to buy stocks. So this is it. Okay, we'll go through each of these. The price of the VectorVest composite, it's really the foundation. Everything starts with the VectorVest composite. All of our signals start with the movement of the VectorVest composite. It is an arithmetic index of all, I think we have over 9,700 stocks in the database right now. The purpose of the VVC is it portrays the market, the overall market direction. A lot of times you'll see the Dow up, the NASDAQ down, the S&P down, right? A lot of times that happens closer to market tops when you have this indecision and you're getting mixed signals with those major indices. We see that a lot. We've seen that a lot in the past. And that's why we use the VectorVest composite. And we don't use the S&P, which is a nice benchmark. But again, you might be trading Russell 2000 stocks or stocks that aren't necessarily in the S&P. So we like to use the VectorVest composite as our overall market benchmark. Okay? Primary wave is up. So again, the purpose is that it portrays the market, overall market direction. We have a signal. It's called the primary wave. The primary wave is our fastest, most aggressive market trend indicator. I like to call it a trend indicator as opposed to a market timing signal because it measures whether the market is up or down on a week-over-week basis. Okay? So when the primary wave is up, that means that the VectorVest composite price is higher than it was 5 trading days ago. That's all it looks at. Is the market higher today than it was 5 trading days ago? At the very minimum, no matter what type of an investor or trader you are, you really want to focus on buying stocks when the primary wave is up. Okay? At bare minimum, when the primary wave is up, it means the market's higher week over week. And we will always say, our guidance will always be that it is okay to buy stocks when the primary wave is up. Conditions will change and trends will strengthen. Okay? And that primary wave up signal becomes stronger during underlying uptrends. So understand that we will always say that it's okay to buy when the primary wave is up. We will always say that not to buy when the primary wave is down. Okay? So at bare minimum, those are the signals, and that primary wave is what you're going to follow to determine whether you're buying stocks on a day-to-day basis or not. And that's what we open up the program every day. We wake up, we check the futures, we ask ourselves, is today a day that we're going to buy stocks? And if the primary wave is up, you have more of a bias to the upside. Checking the futures in the morning, I think, is important. You want to know if your directional bias from the day before is going to be confirmed and there will be follow-through the next day. Follow-through is always important. Even if the primary wave is up but the market's down the next day, we're going to consider that more of a hold type of a scenario where the trend is up, you had a directional upward bias from the previous day, but you don't have follow-through the next day, so you're not going to be buying stocks. Okay, it's more of a kind of a hold situation. Preliminary signal of a sustainable trend happens when the VectorVest composite rises or falls for 2 consecutive weeks now. Okay, very early on in Dr. DeLito's development of VectorVest, this is one of the first things that he recognized in developing the system of market timing. Whether the market goes up or down on a week-over-week basis, and then if that trend continues and then the VVC continues to move for 2 consecutive weeks. We call that a preliminary signal of a sustainable uptrend when the VectorVest composite rises for 2 weeks. Our other system of market analysis then, or our other system of indicators, will confirm that market's movement, and we'll get to that in a moment. But another thing that Dr. DeLito said in one of his essays back in March of 2012, become a green light buyer. He says, even so, green lights should not be used with impunity. All green lights are not alike. Green lights which appear when prices are low offer better opportunities to make money than those that appear when prices are high. How do we determine, though, when prices are low? We use the MTI, one of our market timing indicators, to really kind of give us an idea of what is the upside potential of the market compared to your downside risk. Okay? So here's a VectorVest composite chart. The green arrows are green lights in the price column of the color guard. Anytime the market goes up day over day and week over week, we will have a green light in the price column of the color guard. You can always consider a green light in the price column of the color guard. What you'll kind of hear, in the future, those are safe to buy signals. We're letting you know that it's okay to buy. Okay? Green lights when the market is low, green arrows on this chart when the market's low, offer better buying opportunities and profit opportunities than when markets are high. The MTI, the market timing indicator, okay, is a really important indicator. I use the MTI more so than any other market timing indicator. The MTI is above 1, and you have a green light in the price column of the color guard. That is a stronger green light and a stronger buy signal than, let's say, when the MTI is at 0.7. The MTI is at 0.7 or 0.8 and falling or has been below 1 for a while. Green lights aren't as strong a signal. They're not signals that you should completely ignore, but again, as time goes by and you understand these things and how to put everything together, you will understand and realize, you know what? If the MTI is above 1 and we have a green light in the price column of the color guard, not only is the short-term trend of the market is up, but the underlying trend of the market is up. That gives you a higher probability that the stock that you're going to buy, you're going to make money on it. If the MTI is below 1 and you got a green light in the price column of the color guard, what does that mean? That means that the underlying trend is down, but the short-term trend is up. If you know what both of those mean, right, and you know that I'm going to have a better opportunity making money when the underlying trend is up, you might not follow that green light or be as aggressive and buy as many shares as you would when the MTI is above 1 and you have a green light in the price column of the color guard. So I really look at that MTI, and when the MTI is above 1, I'm primarily bullish. When the MTI is below 1, I think you got to be more bearish. Okay? Buy to sell ratio. We track the number of buy ratings in the program, right? How many stocks are getting buy ratings compared to how many stocks are getting sell ratings. And Steve went through the conditions and the rules for those ratings, buy and sell ratings, right? For a stock to get a buy rating, it's got to be in an uptrend. There are some other factors, right? It's got to be above its stop price, which of course is a 13-week moving average. If a stock's price is above its 13-week moving average, it is in an uptrend. How long it's been above the 13-week moving average will then determine how strong that trend is. But if the RT is above 1, the VST is above 1, if the stock is above its 13-week moving average, our stop price, and the VST is above 1, stock's in a really strong uptrend. We focus on that number, and then we look at how many stocks are getting sell ratings. It is an indicator of the breadth of the market, the strength of a rally or the strength of a retreat. Right? So if the market's falling and the buy to sell ratio goes below 1, that means that there are more sell-rated stocks than buy-rated stocks. For a stock to get a sell rating, it's got to cross below our stop price. That means the stock is in a downtrend. So comparing the number of stocks in an uptrend to the number of stocks in a downtrend is a really key component in, again, market analysis, right? We're trying to analyze the market and understand the conditions that we're in at that time, okay? When the buy to sell ratio goes above 1, indicates the market rally is healthy and becoming more broad. That's when you want to be more bullish. That's another indicator that you want to pay really close attention to. Buy to sell ratio above 1, more stocks are in uptrends than are in downtrends. The conditions are rather favorable at that point. When the BSR falls below 1, that indicates that the market is not healthy and continuing to weaken. And you want to limit your exposure, take some risk off, and potentially maybe play the market to the downside, short stock positions, inverse ETFs if you choose to do that. But there's another kind of situation with that indicator when the BSR goes below 0.20, that the market is searching for a bottom. We don't know when the bottom will come, but when the indicator gets to below that 0.2 level, we feel, because historically this is what we've seen, that upside potential outweighs downside risk. And I want to emphasize the word outweighs. It doesn't mean that upside potential is 100% going to outweigh risk. You always have to weigh that risk-reward profile, right? Every time you buy a stock, what's my upside potential here? How much risk am I taking? When the BSR goes below 0.2, we feel that your upside potential outweighs the risk that you're taking at that point. Doesn't mean the market can't continue to fall, but we feel, and again, we've looked at this historically, it's a really good time to start thinking about going long again and buying stocks again when that indicator goes below 0.20. We then wait for a rally, though, and we don't just buy when the BSR goes below 0.2, right? We wait for an explosive rally, and this is where I'm going to get into the program here and kind of go through the progression of signals that you'll see off of these market bottoms, okay? The other indicator is the MTI. I believe it's here as well. We'll talk about that next. But the confirmed calls now are our slowest but most reliable market timing signal that will never, like Steve said, fail to signal a major market move. It can't fail to signal a major market move. Because for a confirmed up call, it means that the VectorVest composite has gone up for 2 weeks and the buy to sell ratio has gone above 1. So 2 weeks of the VectorVest composite moving higher and more stocks in the database getting buy ratings than getting sell ratings. Confirmed up call, a sustainable uptrend is likely. Again, not 100%, but a sustainable uptrend is likely. And that is a signal that a more conservative investor or someone who is managing a more retirement-minded conservative portfolio will follow. Okay? A conservative-minded portfolio, a conservative investor with a retirement portfolio will unlikely take the first signal off of a market bottom because there is still some risk there, right? The market's been falling, you never know how long it's been falling, but it could be falling for a month or two, right? You're in a sustained downtrend, the BSR gets below 0.2, and now we're starting to see the early stages of an uptrend. So the title of this talk is Decoding Market Trends, and this is how we're doing that with these indicators. So you got a downtrend, the BSR goes below 0.2, and now you have an explosive rally. Who's going to take that signal? The more aggressive trader, right? You're going to look at that, you're going to look for that explosive rally, you're going to look for the primary wave to turn up again, because it's probably been down for a few weeks. The buy to sell ratio gets that low, the primary wave has been down for a while. So you're going to wait for that first sign of a trend change, and that sign is the primary wave up. If you're more of an aggressive trader, you're going to take action. Okay? You buy a starter position or two. We always like to advise you guys to step into the market with a few positions at a time. In my swing trading portfolio, you guys know, up until recently, I am very rarely fully vested. Always like to keep cash on the sidelines. Maybe I'll have 2 or 3 positions in a portfolio, maybe 40 to 60% in cash, because in that type of portfolio, it is a little bit more active, and it is, what I like to do is kind of, when change directions quickly, and you need cash to do that, right? You need cash available to hedge your positions, but faster signals are used, okay? A confirmed downtrend is when the price of the VVC moves down for 2 consecutive 5-day trading periods and the buy to sell ratio goes below 1. If you're conservative and managing that type of portfolio, action is needed. Action is needed at that confirmed down. We never say, hey, just go to cash and close every position in your portfolio, but we always say don't ignore that confirmed down. So what can you do at a confirmed down if you hadn't taken action yet? Tighten up stops at the very least. Take profits, cut losses, reduce exposure, build cash, wait for more favorable conditions. Those are the types of things that you should be considering and thinking about doing when a confirmed down call is given. Tightening stops, taking profits, reducing exposure, building cash. Okay? All right. Here's the more conservative approach. The VectorVest composite is at the top, and then the buy to sell ratio is the indicator there. I'm just going to move over here for a second. This was, man, my eyes. What's that date? May 12th, 2025. Not too long ago. So that was when the confirmed up call was given. Notice what the market had been doing for quite some time. Right? This was a slower signal and a signal that came a little bit later than it generally does because the buy to sell ratio in March, April of this year got so low, it took so long for the indicator to cross above 1. Okay? But it did get below 0.20. It actually got to, I think, 0.02 for a period of time there. Okay? So let's hop into the program. I want to kind of go through again the signals and the approach that you guys should be taking at these different signals. So Ron's in the program. He's going to go to a market timing graph. Okay? And let's zoom in, Ron, to just maybe there to there. Cool. Okay. Buy to sell ratio had been below 1 all year. Right? And for the most part, the market from January of this year had been in a downtrend. This is not an uptrend, right? More sideways than anything else. But this is, of course, a downtrend. That rally didn't change the trend because higher highs weren't put in. And then you had another rip lower and another leg lower. So buy to sell ratio during this time period, what should your tactical approach have been? What should your tactical approach have been for the most part during that time period? Should you be, shorting, cash, not buying stocks, right? So mostly in cash, you're not buying stocks, you're shorting the market or playing the market to the downside or just doing nothing. So that's your tactical approach during a confirmed down. Put the confirmed signals on, Ron. During the confirmed down signals, wow, okay, so we got to go back a little further. Give me a little bit more time. Yeah. There we go. There we go. A little bit more. Perfect. From December 10th all the way to April, your tactical day-to-day approach should have been bearish, neutral, not bullish. Right? Because there are more sell ratings in the database than buy ratings. We know what that means. We know that the market is weak. Conditions are not favorable for buying. So you should be in cash, playing the market to the downside, but not buying stocks. Again, you're more of a conservative investor managing that type of portfolio. Okay? Then what happens is the market rallies sharply. And I forgot what day that was, but you can see this big green candle here. Unfilled green candle. I forgot the news of the day. There was something that happened that day. To cause the market to rally. But that is the explosive rally that we talk about. When the BSR goes below 0.2, and then put the MTI on, Ron, as well. You can just check the box. It's already there. Yep. Okay? Notice, too, during that whole time period, for the most part, the MTI was below 1. So you are really thanking yourself for listening and following our guidance and these indicators during that time period, because if you didn't or you weren't, you might have been buying stocks maybe during these little weaker rallies in this overall downtrend, and maybe not building cash the way you're supposed to, and maybe you were kind of pushing more money out there than you should have. But if you were following these signals and understanding, again, market conditions and market analysis, you're keeping your powder dry for the most part during times when the BSR is below 1 and during times when the MTI is below 1. Okay? Then the MTI goes below 0.6, the buy-to-sell ratio goes below 0.2. Now we start, again, looking for that sharp rally and considering to start buying stocks again. The primary wave, and I want you to zoom in a little bit more closely here and just get me from there to the confirmed up. Yep, that'll work. And put the primary wave on. Okay? Primary wave turned up just a few days off of the low, right? About a week. That's what it takes, right? For the primary wave to turn up, the market's got to go higher on a week-over-week basis. So the primary wave will generally give you a signal no more than a week off of the actual low. If you get really good at this and understand things very well, that blast-off day could be the first day that you start buying stocks again. When the BSR goes below 0.2, the MTI goes below 0.6, keep those numbers in mind, folks. Those are very important levels there. And then you get the explosive rally, and you want to take a position or two. Who's going to take a position or two? The more aggressive trader, right? Because if you remember, if you're managing a conservative portfolio, you like to see that. You like to see the indicator, the market rally off of those lows, but it's not necessarily a signal that you're going to take to start buying stocks yet because your risk profile doesn't line up with the signal. You're managing a more conservative portfolio. But if you are managing another portfolio, like a shorter-term swing trading portfolio, yes, that is the signal that you are going to consider and start buying stocks again. That first primary wave up, or the blast-off day after the MTI goes below 0.6 and the buy-to-sell ratio goes below 0.2. Okay? Then what'll happen is, Ron, put the green light buyer signal on. And what'll happen is, a short time after the primary wave first turns up, you're going to get a green light in the price column of the color guard. Consider that your next buying day, or your next buying opportunity, your next bullish signal. You took a position or two when the primary wave first turned up. You're taking another position or two when the first green light in the price column of the color guard comes after the BSR goes below 0.2 and the MTI goes below 0.6. So you're beginning to build your portfolio now as these signals progress. Okay? We have another signal, one of my favorites is the green light buyer RT kicker. Okay, so Ron's going to change that signal and put the green light buyer RT kicker on. And that actually turned bullish. You see that the green light didn't change, right? So when Ron changed the signal from the green light buyer to the kicker, same arrow appears. So it actually happened on the same day. Change the graph layout, Ron, to the GLBRT kicker. So for this signal to be generated, you do need a green light in the price column of the color guard, okay? But you need true building momentum. That momentum is determined by the relative timing of the VectorVest composite, which, really quick, I'll just read it from the books. We don't have to go back in the slides. RT of the VVC. So we talked about RT on the stock level. It's the same. The definition is the same. The calculation is the same. But we are now looking at the RT, or the short-term momentum of the VectorVest composite now. Okay? With any single indicator, sometimes it's hard to determine its true direction. That's what we use moving averages for. Moving averages are great to help us determine, true direction of anything. Price, RT, EPS, you can even put moving averages on. But they're generally, applied to price. But you see the two moving averages at the bottom. The 5-day moving average, the 10-day moving average on RT and the 15-day moving average on RT. We apply two moving averages to relative timing to determine its true direction. When the short-term moving average on RT crosses above the longer-term moving average on RT, that is a bullish crossover. That along with a green light in the price column of the color guard, is the green light buyer RT kicker signal. So green light in the price column of the color guard means the market's moving higher day over day and week over week. The kicker, moving averages, identify that RT's true direction and momentum is up. Okay? Really solid signal. It's not just looking at one thing. It's looking at not only the market, but a really smart, accurate indicator of the market's trend. Okay? And that's relative timing. So great signal here. Sometimes the GLB RT kicker signal will come after the first green light. So again, the progression goes as follows. The primary wave first turns up off of market bottoms, right? BSR goes below 0.2, MTI goes below 0.6. Your primary wave is your first trend change indicator. Green light in the price column of the color guard will likely be your next bullish signal. Green light buyer RT kicker signal will generally be the signal that follows, and that is another indication that you can go ahead and buy stocks again. So you're taking starter positions or a few positions when the primary wave turns up. You're adding to your portfolio when you get the green light in the price column of the color guard. You're adding even more when the green light buyer RT kicker signal comes. You guys following me? And then the DEW, which is also here. Great. So let's change the layout, Ron, to the DEW signal. Don't get confused or just kind of disoriented with all of the signals and feel like you have to follow them all, or which one do I follow? The whole point of this talk and my objective here is to have you understand what the signals are, when they come, and you have to make the determination on which ones you're going to follow or not. But here they are. And we have different market timing signals because there are different types of investors out there, you know. There are aggressive traders, there are conservative investors, there are more prudent investors. We know that you guys are, doing different things. We can't just give you one signal to follow. That wouldn't make any sense because of folks' temperament and tolerance for risk. So we have another signal called the DEW. Thank you, Ron. You did change it. Okay. When did that signal come? What day was that? April 23rd. Can you give me a date line on that, April 23rd? That DPO is not above 1, so that can't be a DEW up signal. Oh, it did break. Thank you. Yes, okay. This is a special situation that happened here. For a DEW up, most times, the price of the VectorVest composite has to cross above its 30-day weighted moving average. That's the moving average kind of hugging price here. You got upper and lower envelopes on the chart as well. And then the detrended price oscillator is at the bottom. Generally, when a DEW up signal is given, the price of the VVC will cross above its 30-day weighted moving average, and the detrended price oscillator will cross above 0. Notice that didn't happen here because there's a rule that if the VVC breaks the lower, let me start here. If it breaks the lower envelope, then only one of the two rules need to be met for a DEW up. And in this case, it was the price of the VVC going above the 30-day weighted moving average. On the other side of that, if the VectorVest composite breaks the upper envelope, only one of the two rules need to be met for the DEW down signal to be given. If it's the VVC price moving below the 30-day weighted moving average, that's one of the two rules. The DPO does not have to go below 0 for a DEW down. So there's an exception here. Doesn't happen very often. It's happened maybe a handful of times in the 30 years that we've been using this signal and following this signal. Okay? So that was a DEW up signal. That was on what date again? What was the first green light again? It was after that, wasn't it? Green light buyer. Okay. And then the DEW came a day after. Gotcha. Okay, so that's generally what will happen. Primary wave up, green light buyer kicker, DEW. Okay? DEW is a little slower. It's not as slow as the confirm calls, but it is a little slower than the primary wave up, of course, and the green light buyer. DEW up. What does that mean? All right. That means that the market is really showing some strength here. We're generally a few weeks now, at least, a couple of weeks off of the bottom, and that is another signal that you can take to add positions to your portfolio. And then finally, the confirm calls, and we'll change the graph layout back to, we'll go to the market timing layout. Yeah, that'll work. And then put the confirm calls back on. Okay, and we know that came a few weeks later. Again, this confirmed up took a little longer because of the fact that the BSR, man, it stayed below 1 for quite some time. And I remember looking at this and, during our jockey club and the coaching groups, we're looking at this and we're saying, when is the buy to sell ratio going to start getting going? And one of the things I observed, this is an interesting kind of phenomenon here, change or give me a parameter, go to add parameter, and go to the, click on the buy, sell, hold percentage indicator. Okay, take off the other ones. What we were noticing was off of the low, the percentage of holds was increasing. But the percentage of buys wasn't increasing at the same rate. So what's happening under the hood? All of those sell-rated stocks now are transitioning into holds, right? They haven't gotten buys yet, but the sign and the really promising scenario that was happening there was the percentage of holds were increasing, percentage of sells was decreasing. It just took a little while for the buys to start getting going. But once it did, give me the rest of the chart. Go back a little bit. Yeah, that's fine. But once it did, you guys see here, right in this area here, took a little while early on, but once it did, buy to sell ratio really started to take off. So in this situation, because the BSR fell below 0.2 and was there for so long, this confirmed call took a little longer to be signaled. Okay, let's go to the home page. Anybody have any questions on any of that? Do you have a better understanding now of when these signals occur and how you should approach them? Again, this is your tactical day-to-day, should I buy stocks today or not? And that series there and that progression of signals is important because you can begin to step into the market, and that MTI going below 0.6 and the buy to sell ratio goes below 0.2, you should be licking your chops and starting to think about buying stocks when the market starts to rally. Okay, but take it easy and step in with a few positions at a time, as opposed to just jumping in head first. Now, jumping in head first could be more profitable if you're right and the market continues to move higher, but you can imagine what the portfolio performance would be like if you're not right and then the market hits new lows, right? You just jumped into 10 positions and now we got faked out and we're hitting new lows, and your portfolio is going to take a hit. So the more prudent, kind of rational approach would be to step into the market, gain some exposure, get some skin in the game early on, and then add to your positions as that trend matures. It's one of the things I learned from Dr. David Paul. One of the many things I learned from Dr. David Paul is to add to your positions. Start with a few, and then add to your positions or add to those positions, buy more shares of those stocks as the rally matures and the market continues to strengthen. So that would be the best approach. All right, we'll talk about the color guard here. The color guard, green is bullish. It's okay to buy. Anytime there's a green light in the price column of the color guard, that tells us that it's okay to buy. What I like to do with the color guard is open it up a little bit. We're looking at the small view of the color guard. Open it up to a medium. I like to look at this because you can kind of see transitions more so when they take place. Now, we're not seeing much of a transition here because over the last 3 weeks, you see mostly green and yellow, right? You don't see any red lights. That's good, right? Red lights are an indication of weakness, whether it's the price of the VectorVest composite, the RT, the buy to sell ratio. Anytime there's a red light in any of those columns, those indicators are weak. They're either falling day over day and week over week, or the RT and the buy to sell ratio indicators go below 1. So no red here. Mostly green and yellow, which is, of course, favorable conditions, right? Favorable market conditions. You can be long, you can be bullish, you can be holding on to stocks, and you're likely doing pretty well. We've talked about the MTI going below 0.60. There's another side to that. When the MTI goes above 1.5, anywhere between 1.5 and 1.6, your tactical day-to-day approach should change. It should change from more bullish to a little bit more caution. Okay? Just because the MTI goes above 1.5 doesn't mean sell everything. Part of the successful investor approach, and we're gonna talk about that coming up here soon, is when the MTI goes above 1.5, what he does, he doesn't replace stocks. He doesn't buy stocks anymore when the MTI is above 1.5. And I say this to our coaching group members as well in the Jockey Club. If the MTI goes above 1.5, that means that the market's been going up nicely, and you should have been accumulating positions that entire time. Right? Going back to the market timing graph, real quick, and put the MTI on, take that buy to sell ratio indicator off. So MTI first crosses above 1 here, right? You should have been accumulating positions at that time or before that, following the signals that we went through earlier, right? Primary wave up, green light buyer, off of when the MTI goes below 0.6. But by the time it gets to 1.5, click on that 1.5 there, Ron, right? If you're sitting there and you haven't done anything up until that point, then you got to start thinking about asking yourself why. Why haven't I been buying stocks during that time? And if you get to that 1.5 area, you might want to just pump the brakes on adding more positions or new positions to your portfolio. Again, you should be loaded up to some degree by that time and enjoying profits and protecting them at that point when the MTI gets to that 1.5 level. Okay? Go back to the home page. So MTI below 0.6, we are searching for a bottom. We wait for a rally before we start thinking about buying stocks again. MTI above 1.5, we start to search for a top, and downside risk outweighs upside potential. So it's that, right, that balancing act between risk and reward on a day-to-day basis, and that becomes a little lopsided when the MTI goes above 1.5, meaning your downside risk outweighs upside potential. Not that there isn't any more upside potential, but again, you're looking at that upside down type of risk-reward profile. So where are we at right now? 1 point what? 4. We're getting close. Climbing the wall of worry, as they say. We're kind of getting a little closer to that 1.5 level. Go back to the market timing graph quick. Right? MTI is above 1. Never crossed below 1. So MTI above 1, look at what the market has done. This is one of the things I first said was, I like to just consider being bullish when the MTI is above 1, consider being more bearish when the MTI is below 1. Because when the MTI is above 1, look at what the market has done, right? You're bullish during this time period. The exception, of course, is when the MTI goes below 0.6. But an MTI falling from 1.5, gravitating towards 1, falling below 1 is not a bullish environment, okay? You want the indicator to be rising from lows, crossing above 1, and then you can clearly see the performance of the market when the MTI gets to that 1.5, 1.6 level. Okay? Okay, let's get back to the slides. And we'll just wrap up. I talked about the RT, we talked about the kicker, the MTI, all of these indicators are in your books. We talked about the DEW. Green is bullish on the color guard, it's okay to buy. Yellow is neutral, caution is advised. And then red is bearish, do not buy stocks. Notice it doesn't say sell everything when there's a red light in the price column of the color guard or there's red in the color guard in general. You just don't buy. It's your signal to buy stocks or not to buy stocks. Okay, again, it does not tell you when to sell. 3 yellow lights in the color guard, buy with caution or do not buy at this time. What is the indicator when there are 3 yellow lights in the price column of the color guard? What is the indicator that's going to tell you to buy with caution? The primary wave up, right? If the primary wave is up, but there's 3 yellow lights in the color guard across the board, we're going to say buy with caution. If the primary wave is down and there's 3 yellow lights in the color guard, we're going to say not to buy. Again, the guidance stems from that primary wave. Okay? So you can decode market trends with VectorVest, guys. It's about market analysis, understanding these indicators, and doing your best. It's not going to be 100%. You're going to find times where you might have bought a stock at the wrong time, but for the most part, you're doing your best to keep yourself on the right side of the market.
VV Nation, it is my pleasure to let you know that our offers that we had over this past weekend at the 2-day investment seminar in Las Vegas, we're going to extend those offers out. So if you want the best prices on financial guidance anywhere, check us out at vectorvest.com/offers. Sign up now as you have until October 6th to take advantage of these special deals.